Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, Dave Bartosiak here. It's me and Andrew Rocco for our top stock picks of the week. I'm going to kick things off here with Netflix, ticker NFLX. Obviously, probably most of you have Netflix. The online streaming giant. Right now is the Zacks rank number 2 by, technically it's the broadcast radio and television industry that ranks on the top 27% of our Zacks industry rank. Obviously, it's a little different than your typical broadcast radio, but it is what it is. One thing I want to point out here, revenue growth is outstanding for a company that's this big. 14% revenue growth this year, getting up to $44.47 billion. Next year, it's going to grow another 11.5% to $49.59 billion. That's pretty good. And if you look over on the EPS side of things, it's even better. Almost 24% EPS growth for the current year. Next year, swelling another 20.66%. So things are really moving in the right direction here. The other thing I want to point out to you is our price consensus and EPS surprise chart, because you can glean so much information from this one chart. And here you can see that earnings sort of bottomed out in mid-2022 for Netflix, and then the trend started ticking back up. And this is exactly what you want to see, is you want to see a company start with expectations lower and raise them, keep raising the bar as they're beating those earnings reports. That's what you want to see, because that way you know they're doing a great job of managing analyst expectations, but they're also delivering on their promises and things are getting better. And it should come as no surprise that when these earnings sort of bottomed out in mid-2022, that's when the stock price bottomed out and the stock started going higher. So a nice move there. And Netflix, you can see the growth year over year. And with the market bouncing back here, hopefully continuing the bounce. I see it a little bit today. Hopefully it gets better. A lot of these 4-letter tickers are higher beta names, which are outperforming even the rest of the market. So I think a stock like Netflix is probably going to have a decent week this week. That's why I'm naming it my top stock pick of the week. Mr. Rocco, throwing it over to you, my friend. What do you have for us?
Thanks, David, for sending that over. My name's Andrew Rocco. I'm a stock strategist here at Zacks Investment Research. I also do run the Tech Innovators portfolio for our premium subscribers. And today I'm going to cover my top stock pick for March 17th. So let's jump into things. And my top stock pick is one of the strongest names in the market. Full disclosure, it is a name that we own in the Tech Innovators portfolio. I also do own it personally, but that's Alibaba, ticker symbol BABA. It earns a best possible Zacks rank number 1 strong buy. So that's already a good sign. It's in a top 23% industry group, which is the internet commerce group. And Baba is a Chinese e-commerce juggernaut that runs popular storefronts such as AliExpress, which caters to global shoppers, Taobao, which serves its domestic market segment. And like its U.S. counterpart, Amazon, Baba has businesses that stretch beyond e-commerce, such as its Alibaba cloud service. They just came up with a artificial intelligence large language model, which is quite sophisticated, and it's actually borders on the same level as OpenAI's ChatGPT. And their cloud business is one of the largest in China, and it has ballooned to the second largest revenue source for the company. So a lot of angles. Of course, their e-commerce business is their main business. Now, let's talk about liquidity. And one of my favorite investors is Stanley Druckenmiller. He's pictured here. He's made money 30 years in a row, never had a down year. And what he says is earnings don't move the overall market. It's really the Fed. Focus on the central banks and focus on the movement of liquidity. He emphasizes the importance of liquidity and central bank actions over earnings in driving market movement. So we do have the earnings increasing for Alibaba, which I'll show you in a bit. The estimates are great, but I want to also talk about this huge liquidity that's coming into the Chinese market right now and why that should buoy the entire Chinese equity market. So first, let's look at the relative performance here. We could see year-to-date S&P 500 down 4.5%, while Alibaba is up 72%. So crazy outperformance, obviously, especially when the U.S. market has been quite volatile, quite negative as of late. And I believe FXI, which is represents all of China, is up about 40%. So one of the good things about being an active investor is you can look at global markets and pick which market you want to be in. You don't have to be just a slave to the U.S. market. If the U.S. market's not acting well, look for the ones that are acting well. At least that's the way I do things. So clearly the price action is telling us that something is going on in Chinese equities. But beyond that, this is the important chart here. And this is the Chinese money supply. So the Chinese government completed a full 180-degree turn in 2024 and delivered a massive stimulus package, which is carrying into this year. As if slashing interest rates and loosening restrictions weren't enough, Chinese government officials promised to do more going forward. So PBOC, which is the People's Bank of China, they said that their reserve requirement ratio would be reduced again this year, and the loan prime rate will likely be lowered. So all of this is adding liquidity to the Chinese market, buoying these stocks. And really, when the Chinese government wants to boost their market, they really stop at nothing to do so. So again, this is the backdrop. We're in a strong stock. We're in a strong market. We have all the wins at our back here for BABA. And these are the earnings that I was talking about. So earnings growth for BABA has been steady really since it went public 10, 15 years ago, but it did kind of have a sideways action from 2021-ish to 2024. And now those earnings are breaking out again. You have to take into account that the Chinese economy was very, very weak. They basically shut down the entire country during COVID. So there was little economic activity, but now it appears that they're finally coming out of this, and BABA EPS growth is hitting new highs here. And for those of you who followed the Chinese market, you'll probably remember a few years ago, Jack Ma, who's seen in this picture here, he's the founder of Alibaba, and he's one of the richest people in China and one of the most successful founders, obviously, in China. He got into kind of a spat with the President Xi of China, and he disappeared actually in 2020. I think it was 2022, but he disappeared for like 6 months, and Alibaba's stock got crushed during this time period. And one thing you don't want to be, especially if you're a Chinese company, is against the Chinese government. So he got into a little bit of a predicament here. But what happened is recently, this was about 2 months ago, he was pictured shaking Xi's hand, and it appears they're warming up to each other. So that's kind of another fear that's out the window. They're no longer in trouble with the Chinese government. Actually, at the time they canceled, Ma was trying to come out with this Ant Group IPO, which was a fintech company, and the Chinese government canceled that. But it appears that's in the rear view mirror now. So that's good to see. And all of that fear and uncertainty did drive the stock down up until recently. But what that means is actually bullish for investors because the valuation is historically low. So even with that 70% year-to-date gain, you can see this price to sales ratio is right at the lows. It was as high as 10 in 2020. Now it's at 2.49. And not only is it growing faster, the company has more cash on hand, and overall, the balance sheet is cleaner than this period. So that's another bullish tailwind here. Next, we're going to discuss the technicals, and this is my favorite part. I rely heavily on technicals, and Alibaba is forming a rare high type flag here. Basically, what a high type flag is, it's when a powerful price trend occurs in a short period. The flagpole is a rapid increase of 80 to 100% or more over 4 to 8 trading weeks. The flag within that flagpole is very specific. It can not be deeper than 25% over 3 to 5 week period. And then the company must have the robust fundamental backdrop, i.e. growing EPS, robust forward analyst estimates, which Baba certainly has. So let's look at an example first. So this is Taser, which is now known as Axon. And you can see it has this huge move up over 8 to 10 weeks, barely pulls back, and then breaks out of this high tight flag pattern. And you can see the stock went from 8 to 28 just within a 8-week period, or looks like that was longer than 8 weeks. The 8 weeks was the run up. But either way, you can see how explosive this chart pattern is. Now let's move to Baba. You can see the same thing. Baba ran from 80 all the way up to 146. And despite the market volatility, it kind of just chopped sideways, telling us that even though a lot of investors have a big profit on their position, they're unwilling to part with shares. And actually, right before I jumped on this video, the stock was breaking out. So the timing couldn't be better. One thing I would tell you guys to look for is make sure that volume comes in. If the volume comes in, let's say at 50% above average or 100% above average, that would give me more conviction on the breakout. But at the time of this recording, the stock really does look poised for that next leg up. And then another thing that's giving me conviction in the stock is smart money, which is David Tepper. He's a billionaire investor. He owns the Carolina Panthers. He bought banking stocks at the bottom in 2009. He made 5 or 6 billion off Bank of America. Tepper is extremely bullish on China, according to his last 13F disclosure, and specifically Alibaba. He owns 18% of his, I think he has a $6 billion portfolio. So he's got 18% of his portfolio in Alibaba, and he's been adding of late. So it's a really high conviction position, and it never hurts to have smart money on your side. And then finally, what can kind of add a little bit of fuel to the fire here is FXI, which again, that represents China as a whole. It has record short interest. So as we break out here, those shorts are going to be forced to cover and likely send these stocks higher. Also, Chinese companies are buying, including Baba, are buying back a record number of shares. So remember, it's just supply and demand. The supply of shares outstanding is going to decrease when that occurs, and that should drive Baba up and China as a whole over the next 6 to 12 months. So again, my name's Andrew Rocco. My top stock pick was Alibaba. Thank you guys so much for watching. And we do have a promo today. So if you guys are interested, please go to Zacks.com/promo. Again, Zacks.com/promo. And good luck trading, everyone. Thank you.